moving on, and enough monologue from me. This is an interview platform. I do realize it, so let's jump to that part. For this week's regular portfolios, I spoke to a special gentleman, and I know I always say that they're special. I know, but come on, if you can sit and talk to me of all humans, you got like 8 billion options out there. So if you can sit through a 30-minute call and talk to me, you are special. Okay, but so yes, I spoke to Chris Bourbeau, which is who is an aspiring fund manager. Forget, I don't know what's up with me today, but if you by any chance think that it's a good waste of time to talk to me, shoot me an email. That's Antonio@resourcetalks.com, and I'll include you in the regular segment portfolio. But enough talking. Not that I ever could talk, but now I'm even worse at that. So let's play the clip on here. All right, Chris. So why don't we start over with a brief overview of yourself? Tell me about yourself. Who are you? What do you do? Do you like dogs or cats?
I'm oddly a cat guy, so no, don't judge me, please. But I grew up in a small town in Alberta. I was always around the oil industry ever since I was a kid, playing hockey like every small town Alberta kid does. And then once I decided to decide what to do for college, I decided to go into a thing called power engineering. And to be honest, the only reason why I did it was because the money was fairly good. And I had no idea what I wanted to do. So I started doing this. And for anybody that doesn't know, power engineering is not a real engineer. It's just somebody that really specializes in plant operations. So I did that school. So I did my fourth, third, and then eventually I did my second class power engineering. And then got into the oil industry. And then eventually started doing fly-in, fly-out work with plant operations through various companies throughout that industry. And the one thing I specialized in was called SAGD operations. And so I kind of worked my way up through the plant, and then shift supervisor and doing some project management. And then doing MOC, which is management of change type work. So there's been a few projects where I'm very, very involved with operations, and then some projects where I'm very involved from piles in the ground to construction to commissioning and then operations. So, and then decommissioning in some instances where companies didn't do so well. So, yeah, I've been kind of doing that for 20 years. And then in 2013, actually, I really started getting into investing. I kind of bought my first stock in 2013, and then I started off with the Warren Buffett books and Peter Lynch and Joel Greenblatt and all these sorts of things, and got really, really into it and actually really obsessed with it. And then said, hey, this is something I'd like to do for a career. So in Canada, we have a designation called a CIM, which is a Chartered Investment Manager. So I started working towards that. That's kind of like a Canada-only version of the CFA. Not really, a CFA can go anywhere, but CIM is just kind of a Canadian thing. And so I started working for a company called Ultravest out of Montreal. And and so now I'm working towards my hours to be a portfolio manager. And I quit my oil job, and now I am kind of traveling the world with my family, finding places where we would like to live in a kind of a trifecta method, and seeing where life takes me.
For a second there, I thought you were going to say I quit my oil job and I went to work for Greenpeace. But I don't see you sticking yourself to paintings, so that's good. Yeah, what does it take to be a portfolio manager? What do you think sort of the most important skill to do your job well is?
I think it's clearly defining what your objectives are, making your clients understand how you invest, and getting the right clients, and having the luxury of being picky enough to get the clients that are most aligned with what you do best and your investment style, and then kind of a bit of coaching on being able to have people deal with their emotions, and then also being able to deal with your own emotions. So luckily, like my wife says, I'm an emotional pancake. So fortunately, I think that works in my temperament for investing.
I've been thinking though whether the natural resource-based commodities in general are a good fit for a portfolio manager to focus on, because number one, even the companies, even the cash flowing companies, which are a rarity in the space, they are price takers, right?
Mm-hmm.
They don't decide what they sell their gold for or their silver for. So
Yeah.
they're that, but they're very cyclical. And hedge fund managers, for example, they oftentimes they have to report, I guess always they have to report quarterly profits or losses, right? And your investors, they want to see green every quarter, which pushes you to do more and maybe makes the cyclicality of the, you're not able to sit through a 5-year cycle or something. What do you think?
Well, I think that really depends on your mandate. So if you're running a fund that has a certain mandate where that's what your client base is, that they want cash flow or they want relatively good businesses that have high free cash flow and stuff like that on a consistent basis. Or if you have clients that are a little bit more seasoned and can just go where you think that the best allocation of resources is currently, where the best deals are, whether that's cash flow generating business or not, or if that's, you're looking at stuff valued on assets alone. So it really depends on your client base. And I think there's a huge spectrum that people can follow into, and depending on age. So that's where that KYC stuff kind of comes into play to say, hey, this is for me or this is not for me.
Is that what do you do with your money though? Are you mostly focused on the natural resource space?
Yeah. So I am personally, my own stuff is. And a caveat to all that is I don't like natural resources, but here I am. and I think they're inherently terrible businesses. And they suck capital like you wouldn't believe. And you can have nothing at the other end. So I enjoy what I really actually find myself gravitating towards when I'm not in cyclicals is companies that are kind of transferring from balance sheet to income statement. So, they have these assets and they're growing, and then they're starting to finally eke out profits and able to get to a scale where they're starting to generate cash flow. And then they're able to grow within that. That's the harder space because that can be, smaller micro cap stuff too, and where management really, really matters. And you have to be able to get out of it, relatively quickly. So depending on how much money you're working with doing that, liquidity can be an issue.
How do you deal with that issue? Do you approach it mostly through diversification, like being like, okay, 20% here just because it's low liquidity, or like how do you look at it?
Well, I just look at the market cap and how much volume is traded, and I know that some of these businesses, if I have high conviction of the liquidity will be low, but that's kind of some of the risks that I take being in these things. But inherently, my thought is that they start to grow enough where the liquidity becomes quite a bit easier. Now, sometimes they don't work out, and sometimes the bid ask is quite high. But it seems to be fine to me when companies. This is for me personally, and it's all very a personal thing. But I find that companies that are 50 million plus, maybe to 500 million, that's a really good sweet spot for me, where you kind of get to that point and they're kind of getting to be real businesses. The stuff in the 10 million is just, it's so liquid that I can't do anything with it. So, and I don't want to run that risk. So I tend to like those companies more. Now, that being said, I couldn't help but get into the resource space in where we're at from a ratio perspective on how cheap these commodities are relative to history. So I I decided to take a plunge into resource investing. I was always in it a little bit, just because of the field I come from. But to be honest with you, even me being in the oil patch, I find that my edge is not really there compared to anybody else. I'm great in plant operations. I'm great in running a plant. But when you have a fully integrated company, there's so many divisions that have, that's hard to wrap your head around. I just like simple stuff. So to me, like the only competitive advantage I could have in the oil patch is like, hey, I know within that region where somebody punches a hole and they're more likely going to have really, really good results. Or I might know the management team that's there for small cap companies. But those are very rare to even start up. Like, there's basically been nothing since 2013 where you've had a small junior startup and I would know the management and things like that. So I don't think I have necessarily that much of a competitive advantage and other people, me being an insider in the oil patch.
What are you doing most of your digging on? Like which commodities?
So I'm doing uranium right now. That's kind of the most I have. And then silver and gold. That's what I have the most right now. That being said, I would like to diversify a little bit more because the uranium stuff has grown a little bit too much for me. I'm fine with the volatility. I knew what I was getting into. But I am looking at other things like oil services and offshore drilling. And there's even drilling companies around Alberta that I'm looking at as well. So, but to me, I think the most eminent thing will be probably the uranium play. And then maybe I can start moving some of that stuff around a little bit. But yeah.
When would you start doing that? Like, what is sort of your exiting plan and strategy? Off mic, you told me a little bit about you maybe moving some of that into physical commodities. How do you plan on doing that?
Well, I think when we get to a certain point, when we start taking off, say in uranium, I'm going to be slowly scaling out as we go along. The reason why I think that is because I think as energy gets more and more expensive, governments will get more and more desperate to be not potentially nationalizing things or have windfall taxes for people. And I see them getting a little bit crazier and crazier. And to me, I want more and more insurance. And so to me, as that kind of reaches a peak, I would like to have a lot of physical gold as insurance and silver as well to kind of help deal with that.
What is sort of the timeline on that?
Well, it depends on how things go in the future. I don't have a crystal ball, but I think we're fairly close in uranium, within the next 6 months for sure. I think that we're going to start to see some movement just by searching around. There was a good interview with Dustin Garreau the other day on Smith Weekly that it seemed like things were really starting to move in the industry. So I have a lot of optimism for the relatively near future, and then kind of start moving that stuff over then. To me, too, a big thing is what's the minimum amount I need to live the lifestyle that I want? And so to me, transferring over some of that into insurance, and as I go, once I build that up enough, in my opinion, to get to the lifestyle I need, that I want, that's where I'll be happy to allow more risk to play out, or me keep being invested in stocks, just so that I can ensure that I maintain that quality of life that I want.
Let's get to the gun to your head scenario question then, because
Sure.
that might help you get there, even only the exercise of it. If you had to sell everything that you have, physical metals and all the rest right now, and put it into only 3 stocks, which stocks would you pick and why?
Global Atomic for me is one of them, and I've heard people say that before. I personally think that is the best project in the whole uranium space right now. Just to me, I don't see the Athabasca players going into production soon enough within the cycle. So to me, it seems like the most value is there for a multitude of reasons. I also think that some of the smaller US players, so for example, I think maybe Peninsula Energy or maybe Encore would be one of the other ones I would keep, just because they're going to be really quick to cash flow. And then I think at this point, I just started investing into it, but I think it's a really good bet, is Pure Gold. I think they're really turning that operation around. They've almost, I think they're going to reach 1,000 tons a day through their mill relatively quickly, and they're getting to higher grades. And it seems like O'Day is really turning that company around from Oxygen Capital. So to me, I think that's probably the three I would keep right now. However, that being said, if I was only had 3 stocks, it might be a little bit different. You know,
how would that be different? Would you go for less risk?
I think so. I think because there would be less diversification, I would probably go for something a little bit bigger.
Okay, well, Chris, if you had to sort of go back in time, if you were able to go back in time and then talk to your 27-year-old self and give them just one sentence of advice, like you have a very brief moment to give them advice, what would you tell them?
I would say, when you have an idea, take it very seriously and be very curious. That's the only way that you get really, really good at anything, is to have a huge passion and huge curiosity and ask a lot of questions. To me, when you don't have that passion, you're not going to be the best at that thing.